Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker and Jeremy Baker. 419-794-3030 is the phone number. The website, arhq.com. Do you remember the GameStop controversy a few years ago? That is when a small group of day traders ran up the price of GameStop stock and essentially stuck it to hedge funds that were betting it would fail. There's actually a new movie about that coming out called Dumb Money, and it stars Seth Rogen.
I play like a normal, understandable guy, and he's very comfortable and very wealthy. He's making hundreds of millions of dollars off of like the collapse of institutions and companies. My character had invested tons of money betting on GameStop's failure because people started buying stock in it.
I just like the stock.
The company went up in value, and people like Gabe lost tons of money.
Once again, GameStop are involved in an ongoing battle.
How much did we lose today?
$1 billion.
And yesterday?
$1 billion.
It became what was known as a meme stock, and I'm sure most passed playing GameStop because of the extremely high risk, but there could be stocks in a retirement portfolio that are also very risky. So how do you determine the risk of a stock?
Well, actually, I didn't know that there was this money. So, when I was looking at the topics for this week, I actually went and looked up the trailer for this movie called Dumb Money. It's at theaters now. So it's pretty interesting in the fact that a small group of individuals got to stick it to Wall Street, so good for them. But, the reality is when we look at retirement, it's the point of life that doesn't allow the luxury of time to make up for mistakes. And in fact, there can be a lot of extreme risk in a portfolio. And I believe that's our job as a financial professional, to try to line up and match what their risk tolerance is correctly in their portfolio. And we start that on the surface by utilizing some software, don't we?
Yes, we use a couple of different software programs. Morningstar is one I really like. What that does is it sort of shows you your risks versus reward on a plot chart. And we use portfolio optimization. And what we like to do is get you the most amount of return with the least amount of risk. The other software we use is called Riskalyze, and that individually breaks down your portfolio and gives you an assigned risk score. It's on a 1 to 100 basis, 1 being the lowest risk FDI insured money market funds, and 100 being something like cryptocurrency. So what we do is we do an independent portfolio analysis and put together an investment policy statement for folks that gauges their risk. And a lot of people are surprised at the amount of risk they're taking. Even with mutual funds, people feel like they're taking less risk because they're in mutual funds. And then when we show them what their portfolio risk score is, they're a little surprised. And then we try and give them some ideas on how to reduce risk and how to get the proper amount of return with the amount of risk they're comfortable taking.
When you determine risk in a portfolio, there's a lot of different ways that technology today can help stack the deck of cards in your favor. In fact, we're going to be going over those tools and technologies that we use. Again, it's at our Economic Summit. So this is kind of last call to come to the Economic Summit. It's October 11th at 6 p.m. at the Perrysburg Hilton Garden Inn. You can sign up for that event at arhq.com. We're going to be talking for about an hour about ways to put the odds in your favor. And then we also have a casino night where it's just fun money, but it's an opportunity to come and, have some fun money with some prizes and enjoy the company and give you a chance to ask, some individual questions to myself, Jeremy, some of the other advisors that are in the portfolio. But when we look at it, we're really kind of slicing and dicing the things. As you talk about, we've got software like Riskalyze, there's Morningstar, there's TipRanks, there's Schwab that allow us to get this research that help us try to make a better educated decision about what's in the portfolio. Some of the key characteristics I'm going to tell you folks that you want to look at in your portfolio is number one is know what you own. A lot of times people come to the office and I'll ask them, what's in your portfolio? I had somebody that we were talking with the other day, and
right.
What he mentioned to me is he said, when he looked at our basket of stocks, he said, well, there's a couple of stocks in there that I just don't agree with their opinion of what they do and how they run their business and their business decision. And we've seen this in the news lately, right, with some of these companies. And,
Sure.
As a smaller organization, the great thing is we're able to tailor the approach down to exactly what is right for that individual, whether it's their social beliefs, whether it's what type of desires there are, down to their risk level. And so in this example, I asked him, I said, well, do you know what you own today? And he said he didn't. As you pointed out, we went to Morningstar.com. We clicked on his largest holding. We looked at his portfolio. And his portfolio, the number 2 holding was one of the companies that he said he didn't believe in what their opinion was and didn't want to invest in them.
Right.
So if you're listening and you don't know exactly what you own a bunch of mutual funds, you might think you're diversified, but you may not be. You may not be invested in companies that you also believe in. We also saw this happen in the 2008 environment where a lot of people own mutual funds, but they also own the same thing. We can see that in today's environment where you might think you're diversified, but there's only about 7 stocks that represent, nearly 25% of the performance of the S&P 500 index. And so if you have several investments that own the same thing, that can increase your risk. It could increase your return, but do you want to take that level of risk, especially at retirement time? Last is you need to understand what the methodology of your approach is. I love it when Chaz talks about this, the investment methodology. And so if you don't know what the investment methodology is, what it does is it refers to the systematic approach or the set of principles that an individual, a financial institution, or an investment fund follows when making investment decisions. It encompasses their strategies, techniques, and rules used to analyze, select, and manage investments with the goal of achieving specific objectives while managing risk. I'll give you one example is, if your investments just, went down with the stock market last year and then went up with the stock market this year, that could be more of a buy and hold strategy. Your fund, by definition, may not have the ability to go a defensive portfolio. So if economic conditions change, and like our team and some of our strategies, we have the ability to incorporate what I refer to as circuit breakers on an account that are designed when technical indicators say risk is high, where we could reduce and or eliminate equity positions, go more defensive into things like fixed income or cash to try to reduce risk. And, having circuit breakers, I think, is an important area for folks as well. The second area is looking at companies that we believe that are strong. For example, in our portfolio, one of the criteria that we look for is we look for companies that have large cash positions. So small or medium-sized companies had to have over 100 million. Large companies had to have over $1 billion. We can look for companies that have low debt. Those companies that have lots of cash and low debt, I believe that if the market and the economy has trouble, it's not to say those stocks aren't going to go down in price. What it's going to say is hopefully those companies in good financial position can weather the storm. And being the fact that we're dealing with retirees, we're wanting to invest in companies that are going to be here really for the long run, not these quick get-rich ideas like what happened in this dumb money movie with GameStop stock or some of these other get-rich ideas that you see on the internet or people are approaching. We're looking for strong ideas with companies that have good return on equity, that can be, companies that can weather the overall approach. So again, if you don't know what your approach is, you don't know what you own, you don't understand the methodology of the investment company that you're working with, now's the time for a second opinion. There's 2 ways you can do it. Jump right to the front of the line, give our office a call. We'll give you an independent portfolio analysis. The second way is come out to our economic summit, again, October 11th, and learn about putting the odds in your favor. We're happy to help you and can absolutely help educate you about making smart financial decisions to finish the year strong and to go into 2024 with more confidence with your finances.
Being able to figure out what's going to work best for you in your retirement. The team at America's Retirement Headquarters would love to see you, whether that is at their upcoming events. Again, you can go to arhq.com, click on the events tab, find one that works for you, or in the office, just schedule a time to speak with them, 419-794-3030. And we want to thank you for joining us today, as we always do. Really do appreciate you taking the time to spend with us here on the show. Hope you have a great week ahead of you. Nolan and Jeremy, thank you. Appreciate you guys as well. And as we wrap up here, I want to leave you with the final word.
Yeah, we have a little bit of beautiful weather left here in Northwest Ohio. So enjoy the beautiful weather, take time to take the moment, and just remember when you think retirement, think America's Retirement Headquarters. It's home of the Retirement Guys formula and America's Medicare Associates.